Well, good morning. I'm Jagendra Rana. The topic of the discussion today is uninsured lives in India. Uninsured lives in India. In 2025, an estimated 30% of India's population, or roughly 400 million individuals, lack financial protection for health despite growing health insurance penetration and sector growth. Here is a more detailed breakdown. High health protection gap is there. A significant health protection gap persists with a substantial portion of the population lacking health insurance. Growing health insurance market is there, but the health insurance market in India is growing not fast enough to cover the entire population. Challenges to insurance penetration, factors like affordability and awareness plays a role, and the low insurance penetration rates. Focus on universal health coverage. The government and industry are working towards achieving universal health coverage with initiatives like the Insurance for All initiatives. Insurance for all. Need for increased awareness and accessibility. Efforts are needed to increase awareness about the benefits of health insurance and make it more accessible and affordable for all segments of the population. Focus on non-life insurance. Non-life insurers are expecting to register double-digit growth in 2025, driven by a supportive regulatory framework and innovative product offerings tailored to customer needs. FDI in insurance sector. The government has proposed to allow 100% FDI in the insurance sector, which is expected to attract global insurers, boosting employment and increasing insurance penetration. Insurance penetration. So this global economy held up better than anticipated in 2023. Now insurance market has positive outlook because the health sector is growing very fast. Not only health, the insurance sector is growing very fast, you can say. The 40 crore Indians have the medical emergency. An emergency out-of-pocket medical expenses today can financially ruin a family. This ugly truth necessitates everyone to invest in health insurance, but at least 30% of India's population, or 40 crore individuals, live devoid of any financial protection for health. Any financial protection for health. So the lowering the 18% GST on insurance is a long-made demand in a 31st and 32nd meeting. The low government expenditure on health has constrained the capacity and quality of healthcare services in the public sector. It diverts an estimated 2/3 of patients towards costlier private health care. Prepayment through health insurance emerges as an important tool for risk pooling and safeguarding against catastrophic expenditure from health shocks, and can also improve the efficiency of healthcare provisions. So the Past decades' low rate and environment challenged traditional life insurance business models and has been a catalyst for ongoing shift in the sector. The life insurance and annuity sector has played a pivotal role in financial landscape. Life insurers provide financial protection and saving products to households and represents a key source of funding for government and the economy. But here in India, the awareness about the life insurance is also not very much. Because the people are still taking either the small sum insured policies or not taking the policies. So that's a major factor. While life is the mainstay of India's insurance market, accounting for 74% of total premium volumes. We estimate that life insurance premium will grow by 4.8% in 2024 in real times and by 5% in 25. So currently almost 90% of premiums are for investment products, which we expect to grow by 5.1% in real terms this year. The insurance sector gets its own engine because the government has increased the FT, proposed to increase it to 100%. So this is one good feature, that the life insurance will increase in India, and this will promote, because the uninsured population in India is very alarming. Reason being, people do not have the awareness. The insurance sector has been pushing for larger limits for foreign direct investment ever since it was opened for private insurers in 1999. The sector has come a long way from having 26% FDI to ultimately being opened up for foreign investment up to 100% in budget 2025. This move affirms the government's vision of insurance for all by 2047. So the government's proposal to extend 100% FDI in the sector will not only open doors for global insurers, but will also have a larger impact on the Indian economy. So with global insurance coming to India, the economy will benefit from employment generation and increased insurance penetration. The newly set up insurers will try to tap into unexplored markets and regions to strengthen their customer base in India. This will ensure enhanced protection of the life and assets of Indian citizens. The government has also been creating awareness about insurance among the rural population in the form of crop agriculture insurance and other welfare schemes, through which insurance products are offered at affordable premiums. So with a greater number of global insurers entering the Indian insurance ecosystem, the demand-supply dynamics will be met till the last mile. The existing insurance companies, which typically operates with a global insurance partner, will be able to scale up their existing businesses. A lot of global partners of existing insurance companies have identified the potential that the Indian economy offers due to its demographics and economic factors such as large and young population, increase in MSME operations, and dependency of a substantial size of the population on the agriculture sector, among others. All these factors offer a conducive environment for the insurance sector to bring in new service and product offerings, thereby scaling up their overall business activities in India. So with the proposed changes in FDI limits, these foreign partners can bring in additional capital from overseas to scale up their Indian operations. The existing insurers will be able to set up new branches in the rural areas and tap the customer base in the rural parts of India, which will be a win-win situation for the insurance companies as well as for the large number of people who did not have easy access to such insurance offerings to protect their life and assets. The insurance penetration presently at 3.7% as against a global penetration rate of 7%, will surely see a multi-fold growth in the years to come. Also, with the additional capital inflow from foreign partners, the existing insurers will be relieved from the stress on their solvency. The insurance sector played a vital role during the COVID-19 pandemic, which unfortunately resulted in creating stress on their solvency. However, the availability of additional capital will release the stress on solvency and assist in providing enhanced protection to the policyholders. So lastly, it is worthwhile to note that the proposed 100% FDI is permitted only in case where premium amount is invested in India. This strategic move from the government will ensure retention of capital in India and pump in the capital market, as the insurance sector is one of those which makes heavy investments in the Indian capital market. The insurance companies, which form an important part of the economy, have been under stress of the past few years. The proposed amendment will now enhance their capabilities for product innovation, meeting customer segmentation and risk management, which would result in securing the interest of policyholders at large, ensuring the government's vision of Sabka Vikas. So the India's insurance landscape says it is poised for growth. The rapid growth in the insurance sector can be attributed to the increased participation of private players, use of technology, product innovation, improvement in distribution capabilities, and improvement in operational efficiencies. So the coming decade is perhaps going to be a golden period of India's insurance sector, be it life and non-life, full of opportunities and a few challenges. But the industry is in a position to take full advantage of the opportunities and forge ahead of challenges. The regulator has been in sync and has been ensuring that the regulations act as facilitator and not be a hurdle in the forward march of the industry. Let's see where the industry stands today and what the path ahead is. Because in financial year 24, the non-life insurance companies have shown good increase in the health insurance business, and the non-life insurance companies premium income increased by 19.5% year on year. The growth was driven by health, motor and crop insurance. So the number of non-life insurance policies witnessed a growth from 253.1 million in FY22 to 301.8 million in FY23. The rapid growth in the insurance sector can be attributed to the increased participation of the private players, use of technology, product innovation, improvement in distribution capabilities, and improvement in operational efficiencies. Post-COVID, the sector is also getting a boost from the government's initiatives like the Pradhan Mantri Fasal Bima Yojana for crops and Pradhan Mantri Jan Arogya Yojana for health insurance, introduced specifically for the rural population. RDI's initiatives such as Bima Bahak or women agents who go to rural areas with the insurance with insurance offers, and we must complete platform a digital marketplace that makes insurance accessible even to remote areas by offering services like policy purchase, renewals, and claims management. Will also be will play a very important role going forward. Because the RDI has taken insurance for all by 2047 mission and is tweaking its regulations to help the industry achieve this goal. The government has recently mooted a bill to allow 100% FDI. So along with the competition, this will bring in future know-how and international best practices in the sector. The regulator is also planning to issue a lot many licenses to private players. In a recent announcement, IRDI gave flexibility to insurance companies to fix an overall cap on commissions to agents, brokers, and other intermediaries. The RDI committee will soon bring in many more reforms, allowing extensions of the free look period, allowing agents to tie up with more than one insurance company, which will have significant impact on the insurance industry. These measures will help insurance companies to better manage their management expenses. The insurance regulator has been consolidating regulations and making them principle-based from the viewpoint of ease of doing business and encouraging innovations in the sector. For the industry, thus, increased competition will bring in best practices and newer product design on the one hand, with affordable pricing and access to insurance seamlessly for the customers on the other. So the proposed tax reforms, including TDS rationalizations and increased thresholds for senior citizens, will help taxpayers and promote financial inclusion, which will eventually play a significant role in fulfilling the Insurance for All by 2047 goal. Thank you. Thank you very much.